Let's say you've been saving bit by bit, sometimes 20k, sometimes 50k, and you've taken investment risk here and there. Some worked, some didn't work. And you've also been hearing people say, my money is working for me, and you wonder what they really mean. Deep down, you want the same thing. You want to grow your money without stress, but with several options like bond, stock, cryptocurrency, treasury bills, mutual fund. It's easy to feel lost in between all these things. That's where diversification comes in. What this simply means is not putting all your eggs in one basket. Today, I'm going to walk you through how I would personally build a well-diversified investment portfolio as a Nigerian investor. Whether you are starting with 100k or 5 million naira, stick around and I will show you how you can do this. Diversification simply means spreading your money across several investment options so that if one doesn't do well, the others will balance it out. It's like making Nigerian jollof rice with plenty ingredients. If tomato and maybe meat doesn't work out, then maybe something like seasoning will balance it out, will save the food. That's how investing works too. In Nigeria, the way naira behave with insecurity in the market, cost of living rising daily, diversification is not a luxury, it is a survivor. Now let's break it down. As a Nigerian, there are so many places you can put your money, but the main basket you can put your money is number one, low risk investments like treasury bills, federal government savings bond, federal government bond, money market and money market fund. Things like this will not make you rich, but they will protect your capital. The second one is moderate risk. Moderate risk, a balanced fund, maybe something like a dollar mutual fund, something like maybe some corporate bonds. These can weigh, the scale can weigh either way, but the risk is not as high as the one I'm going to mention. Then the last one is the high risk investment. The high risk investment, things like stocks, ETF, and even cryptocurrency. So these ones are for people with high risk tolerance. But don't let the word risk scare you, because it's all about how the investment can go up and how the investment can come down. So even saving in naira comes with risk when you talk about depreciation. That is why it's important to diversify your portfolio so that, you know, even if this one is risky, which can also give a higher return, then the other part will cover it even when you are losing in this side. Now, here is my step-by-step diversification plan. How I would go about it if I'm just starting today, if I'm just investing for the first time today. The first thing I would do is to know my goal. I will ask myself, why am I saving this money? Is it for rent in 1 month, or for my children's school fees in 18 years? Or is this money for my retirement in, let's say, 20 years? So let's say the money for rent next month shouldn't be in stock, but money for your children's school fees and retirement, you can put parts in the stock, which can take up to maybe 10 years, 5 years. You can put part of it in stock. Short-term money shouldn't be in stock. So short-term, like less than 1 year, while long-term money can be in stock, something longer than 1 year. So the second thing is I have to understand my risk appetite. Let's say you need to understand your risk appetite. Ask yourself, what if you refresh, and if you invest today and you refresh your app and you see that your 100,000 naira is going down to 80,000? What will you do about this thing? Will you sell everything and redeem everything and just move ahead? Would you wait for the next 5 years to 10 years and see if they will grow in the market? If you are more conservative, that's if you are the type that, you know, just want to retain your capital, which is the most important thing to you. If that's the most important thing to you, then you lean towards a low risk investment. But if you are adventurous, then you have to mix it up. You can invest a little part in treasury bills, a little part in a stock market, and a little part in something like dollar fund, mixing it up from medium, high, and risk investment. So now let's assume I have 1 million naira to invest, and I'm just starting out as an investor. The first thing I need to do is to create a money market fund account. I will invest 40% in money market fund. The 40% is 400,000 naira. What the money market fund represents is safe and steady income. Then I would invest another 100,000 naira in federal government savings bond. This bond can give you interest every quarter. for the next 2 to 3 years, depending if you did for 2 or 3 years. Then that means 500,000 is gone, 50%. Then the next one I would do is to invest 150k in something like, let's say, balance fund, or just like a little bit medium risk investment. It's something like balance fund or equity fund. Now, the third one, I will invest 15% in balance fund or equity fund, something with medium risk. This will give me opportunity to even earn from stock without investing directly. We've used 650,000 naira. Then for the fourth one, I will invest 10%, which is 100,000 naira in Nigeria stock, dividend paying stock, not just anyhow stock. I will invest the 100,000 naira in a dividend paying stock. I will still have some money left, so the next one will be 20%. I will invest the 20%. I will convert it and then look for dollar fund that will allow me to invest at least $100 per start, just for currency preservation. I will invest the 20% in dollars. I know the interest that this thing will give you, they are not much, but it will help you spread your money so that tomorrow when you have more, you can just split it and top up in those places. So the 5%, which is 50,000, will probably go into a fintech app. Honestly, I will just put it there so that, you know, in case of anything, I can still top it up, but just keep it there because some of them have really good rates. So that's how I would split my 1 million naira if I'm just starting afresh. This is assuming that this money, I may not even need it. I'll just, instead of leaving it in savings account, I will split it here, which will make it easier for me to top it up as soon as I start earning more. And you don't have to start with 10 million. If I have like 500,000, I will still split it. It may not give you much, but it's a base for you for future investing. One of the best decisions I ever made was keeping part of my money in dollars. Maybe it's because as a freelancer or as a remote worker, I earn mostly in dollars, but even at that, I invest in naira, but most of my money goes in dollars. Because when naira is very, very unstable, and when it's unstable, I don't panic, because I know that my dollar is there, and the other one, even if it's losing value due to inflation, somehow you are a little bit covered. You have a hedge fund. I always tell people, if your expenses are in naira and your savings are in naira, you are fully exposed. You have to protect yourself a little bit by converting a few, just a little bit of your money, and then investing it in dollar generating investments. Let me quickly tell you the 3 mistakes I made when I started investing, which you are not going to make. Number one is putting all your investments in one platform. From what I've experienced, you know, with delay withdrawal can happen with one platform, and even sometimes platform can crash. Although if you go to the one that, if you make sure the one you have is well registered, there's possible and have history, then there's possibility that your money is very safe. But putting all your investment in one platform, that's not good. That was one of the mistakes I made that when I started earlier that I fully regret. The next thing is chasing high return. You know, it's very difficult to focus when you are chasing high return. For instance, this platform may be giving 23% on mutual money market fund today, and the other one is giving 21%. If you move your money, not considering the transfer charges, to the other one today, tomorrow again, this one may pass the other one, you will now move it again. It's just a little bit, at the end of the day, you are losing money, you are not making money by moving your money up and down. I've seen a lot of people move this money up and down because of the mutual fund. This company is 23, this one is 22, just 1%. The third mistake is ignoring fees. Don't ignore the fees. So before you invest in any platform, make sure you check the fees, so that your money will not be going unknowingly. At the end of the day, investing is not a one-size-fits-all. It may not be exciting. It may not. It's not even a magic. Sometimes it can even be boring, but it works. And this is just my opinion. So if not everyone would split the investment the way I split it, and that is absolutely fine, because it's not a one-size-fits-all. The goal is not to look rich, but to sleep well, knowing fully well that even if naira crash or anything happen, your money is safe, because you have already put a system in place to cover each other like brothers and sisters. Based on everything I say, if you are diversifying your portfolio, you are not just investing randomly. You are building a structure a safety net for the future. So whether you are starting with 200,000, 10 million, 5 million, or even 100 million, you can start investing like a pro if you take your time, learn the basics, and then diversify wisely. If you like this video, please give it a thumbs up and then share it with people who may need to see this. Don't forget to hit that subscribe button, and if you need me to break down any more investment type, please leave the comments down below and I'll respond as soon as I can.